Islamic finance, a catalyst for financial inclusion. Financial inclusion defined as an economic state where individuals and firms are not denied the access to basic financial services based on motivations other than the efficiency criteria. It ensures the ease of access, availability, and usage of the formal financial system for all members of the economy. It is estimated that 1/3 of the world's adult population, which is over 1.7 billion adults, do not have access to formal financial services. The World Bank's Global Financial Development Report, GFDR, identifies 4 major forms of financial exclusion classified broadly into voluntary and involuntary based on this figure. Voluntary exclusion refers to the segment of the population or firms that choose not to use financial services either because they do not need those services due to a lack of promising projects or cultural or religious reasons, while some individuals or firms may be involuntarily excluded because they lack sufficient income or, in the case of credit markets, an extensive lending risk profile. Alternative-based capital market products such as equity crowdfunding, ECF, and peer-to-peer, P2P, financing platforms as well as venture capital, VC, and private equity, PE, are available to cater the needs of MSMEs at different stages of their businesses to connect underserved pools of investors, ultimately resulting in better inclusiveness in the financial system. Role of public sector and private sector in developing financial inclusion through Islamic finance. Governments and their agencies, regulators, multilateral institutions, and international associations are important stakeholders, which have played a central role in creating an enabling condition for an inclusive financial system. The following figure highlights some of the key fintech services. The International Monetary Fund, IMF, in its policy paper entitled Fintech, the experience so far stated that the modus operandi of some fintech models are highly congruent with Islamic finance principles, with the latter focusing on asset-backed transactions and risk sharing. The report further supported that fintech can make screening transactions quicker and easier, improve traceability, and Islamic finance has a critical role to play in enhancing financial inclusion. As Islamic finance embraces the agenda on SDGs as well as sustainable finance and investments, there is a firm conviction that the industry is moving towards a more inclusive financial system. Islamic market solutions applied in the right manner will benefit countless lives and communities. This is crucial to ensure that the efforts have the desired impact and remain sustainable in the critical reflection for this topic. Most of countries show a significant growth of account ownerships by the adult population, increased from 2011 to 2017, the latest recorded data taken from Global Findex database. Malaysia is one of the countries that we need to complement in their journey to get their people participate in the financial inclusion at a high rate. This country already implements the Islamic finance in their country. For such a long years ago started on July 1, 1983. As an Islamic country, Malaysia proved to be at the forefront of Islamic banking and finance by adopting a dual banking system which emerged them as the first country to implement it. Islamic banking assets reached $254 billion as at December 2019, with total funds placed with Islamic banks now represent 38% of total banking sector deposits and continues to grow rapidly. The advancement of technology in Malaysia, in which many people have their own mobile phones and wider connection of internet compared to years ago, also helped this country to awake this lower income group to involve in the financial inclusion, as they can bypass the bank to make a transfer payments and just click it on their phones. This kind of facilities help this groups a lot. So what I suggesting here is the other country can emulate Malaysia in those actions to widen their financial inclusion using the Islamic finance sectors. The government should help undeserved segments in their country and foster them to be involved in the financial inclusion. In addition, they should make a change to Islamic finance and develop more internet connection range through the country, without left any groups behind. These ways more numbers of lower income group will be trust to deposits their money in the bank, thus a greater financial inclusion can be happened around the world.